We have with us Mr. Nalin Gupta, the MD at Kumar Infraprojects, joining us to talk to us about what's exactly brewing in the company. Nalin, hi, Anisha this side. Been long, and I think within the time that we have chatted, it seems like there is a complete turn in terms of the company's prospects, or at least the market is acknowledging that now. A solid surge in the stock price, the order book is looking healthy, and things looking on the upside now, Nalin.
Yeah, I would say, Anisha, it was, I would say that being a promoter of Kumar, I still feel that the price is undervalued as to what we should be, because the company is doing really good, and we had a historical order book for Kumar wherein we have already bagged, we have been awarded works of around 8,000 crore plus, and we are L1 in more than 2,100 crores worth of projects. So it really looks good, and with the EBITDA of 14-15% that we have backed this order, I think the company should be performing much better than what we have been doing all these years.
Fingers crossed for that, and yes, as a promoter I can expect you to want more from the market always, but we also want more from you in terms of the performance, right, Nalin? So talk to me about what's the expectation in terms of where the revenue profile can be of the company, let's say a couple of years from here out. I know already you've laid out that vision 2027, but realistically what's the number one should expect for FY25 and 26 as well?
Well, so on an average, we should say, though the base of the company's top line is growing every year, but still we expect a growth rate of around 15% that we had been seeing on a year-on-year basis. And by FY27, what we 2 years back when we gave the guidance of it being $1 billion revenue, when of course the dollar price was 76 around that time. So that's a different case. But we expect that by FY27, we should be surely reaching 7,500 crore of top line. And with this new orders that have come up, though they will not be contributing in this financial year, but from the next year onwards, they will be starting, some projects will start generating revenue and adding to the top line. So I would say that we should surpass the top line guidance given by us of 15%. But I would say that it's too early to comment on those numbers now, as the projects have just been awarded. But we are very positive about the top line guidance as well.
How's your mix of the projects, the category of projects which you're bidding for? How's the mix actually going through a change? Earlier, you were more dependent on roads and bridges. Now I understand energies, power, rural development. You're trying to have a better mix of projects.
Well, so as you rightly said, earlier our more than 50% of our order book and top line, both were coming in from the metro sector. But now if you see, we have a diversified type of order book, wherein metro and elevated structures is surely our area of forte and major focus. As well as this year, we have also bagged the road tunnel jobs. 2 projects that we have bagged. One was last year about the Bharat Mala Pariyojana project near Mathiran for the road tunnel, which was by drill and blast. And this year we have bagged order of this GMLR, which is India's largest tunnel ever been constructed or planned in the near future, which is of 14.5 meters. So that's again a different vertical, I would say, a huge diameter of tunnel to be constructed, where Kumar stands with a good expertise into tunneling. With 8 tunnel boring machines already in our fleet. And again, we have taken up this river development front at Pune. We have taken up building jobs, and we have also entered now into the water sewerage projects. So we have bagged the 3 projects of smaller diameter, which is 2.6 to 3.2 diameter dia, where we have taken this sewerage tunnel projects for the Bombay Municipal Corporation. So these are different verticals we have been entering, and now we have also just a couple of days back, last week we have bagged we are L1 rather, I would say, for the coastal road project, which is for the Bombay Municipal Corporation, connecting from Versova to Dahisar with an arm that gets extended and gets connected to the GMLR project. And that's how we were quite, I would say, competitive in terms of bagging this package B, which will be almost an integral part of the GMLR.
Nalin, I also want to understand how's your margin profile going through improvement because of this improved or renewed the mix of revenue.
Well, so I would say that we have been in the range of 14 to 15% itself. and which itself is a very good margin, I would say, in infrastructure segment. If you look at the margins of 14-15% EBITDA with a 6 to 7% PAT, I think it's very few companies in this sector that they are doing such numbers. So, but with the growing top line also, what's more importantly a matter of satisfaction for us is that the margins have been kept, will be of the similar range, though we are trying to make it more better by some few basis points to economize and to improvise on the margins. But it should surely be between 14 to 15% is we are quite confident to maintain that.
14 to 15%, beating your revenue guidance of 15% that you had given, Nalin, but everything is looking good. What could be the risk area? Because right now your order book is also quite strong. Your L1 in that big project that you talked about, what could be the execution risk for you going forward, or do you not see any execution risk at all?
I wouldn't, on a serious note, I don't find any such risk factor that I should be worried about, because all these jobs that the company has bagged comes in from the area where J. Kumar stands at a good, I would say, decades of experience, and with the excellent team and more than 1,500 strong engineers working for J. Kumar, and with the improvement in the management level also, we have taken up some good working hands. We are pretty much sure that there should not be any risk, and these works we should be able to execute in a much comfortable manner in the similar cases that we have executed in the past. Like the Chennai elevated corridor, it's a similar project that we have been completing, which we completed at Dwarka at Delhi, and which is now it will be put to operation very soon. So I would say that these projects are already of the area where J. Kumar has a forte. So there are not, I don't see any reason where we should be worried. Even if you look at the financial discipline, we have a debt equity ratio of just 0.25. So if the financial discipline followed by the company, the technical expertise, the in-house working machineries and style of working, I think we are pretty much sure that the works will be completed well on time and with proper margin without any risk factor that we foresee.
Raise plan, right? Because you said your debt equity is 0.25x, so I'm assuming no need to raise further equity for now?
Immediately, there is no such plans for us, because we are quite at a comfortable position, and going forward, depending upon the requirement of the work, if it is required, it's a different thing. But with the debt equity and with the type of the financial comfort that we have, we don't see any such requirement in the immediate time to come.
On that note, we'll let you go. Appreciate you making time and speaking with ET now. So that's the management of J. Kumar Infrastructure. Not really worried about any concern for now. And the stock, no wonder, is locked at upper circuit of 20%, $600 almost on J. Kumar Infrastructure today.